Hi, this is Team 405 for the Credit Research Challenge. First, going through our agenda, we will be analyzing Airtel along these parameters with a focus on credit portfolio management and credit rating. Business description: Airtel has a diversified service portfolio. They are present in wireless services, home services, digital TV services, Airtel Business, and towers. Airtel Payments Bank has been deconsolidated. Airtel has a presence in Asia as well as Africa. Going through their business model, here we can see their primary revenue sources are from subscribers, SMEs and enterprises, and their main cost drivers are infrastructure lease, maintenance and insurance. Industry overview and competitive positioning in Africa. Out of the 14 countries in African market, Airtel is a leader in 4 countries, holds second position in 8 countries and third position in 2 countries. Industry overview: India. From September 16 to December 16, data usage per subscriber per month increased from 236 MB to 884 MB. This massive rise can be attributed to Jio's entry in the market. Porter's analysis: here we have analyzed the 5 industry forces to determine the intensity of competition in the telecom industry. The primary focus should be on competitive rivalry and bargaining power of buyers. Competitive positioning: India. Here we can see how Airtel is positioned in India due to changing industry dynamics. There is a rise in mergers and acquisitions such as Airtel acquiring Telenor and Vodafone merging with Idea Cellular. The milestones that Airtel has achieved in his journey till now: Airtel has come a long way from 2010 till 2018 and has acquired a large base of subscribers. It has won many awards and is ranked among the top 100 firms. B2C service sector. While analyzing Airtel's diversified portfolio in B2C service sector, we can observe that there has been a rise in the number of subscribers in all the services. Airtel is making a profit in digital TV services but is undergoing a loss in wireless and home services. B2B service sector. Moving forward, in B2B sector, we can see a positive trend in gross revenue and EBIT of both Airtel Business and Tower Infrastructure. Business segment analysis. Over the last 4 years, Airtel's mobile service segment have taken a hit and revenues have declined by 17.8% and profits have declined by 58.5% because of increasing churn rate. Indian economy forecast. Increasing GDP per capita income and FDI inflows has been a key determinant of demand growth in the telecom sector in India. The emergence of affluent middle class is also triggering demand for mobile and internet segments. Future opportunities in telecom industry. Mobile subscriber base is expected to increase by 3% and by 2024 this may help in increasing the revenue for Airtel. Similarly, data traffic is expected to grow by CAGR of 26%, which might require a capex investment to sustain in the business environment. Jio's impact in terms of average revenue per user. ARPU was constant for all the 3 major players in a given range before the arrival of Jio. But as you can see, after the Jio's entry into the market, ARPU has been constantly decreasing. Jio's impact on customer share. Although Airtel gained 6% market share in the wireline services, but at the same time lost 6% market share in wireless services and 9% in broadband services. It also lost close to 5.7 crore customers in December 18. Management and corporate governance. They have a highly capable and transparent corporate governance, which has been awarded Golden Peacock Award in 2017 for corporate sustainability.
Dupont Analysis. The 3 factors affecting the return on equity are the profit margin, the effectiveness of utilization of assets so as to generate more sales, and the financial leverage. In this case, we can see that the reduction of profit margin is clearly reflected in the graph of the return on equity. Furthermore, the reduction on return on assets is at a faster rate than the increase in financial leverage, thus further lowering the return on equity. Second is solvency analysis. The increase in financial leverage is further substantiated here, as we can see that the debt is further increasing here and the ability of the company to cover its interest expenses is lowering. However, Airtel has started taking baby steps towards deleveraging, which is now being reflected in the debt to equity ratio. The third analysis that we are conducting is the liquidity analysis. Airtel's liquidity analysis shows that the liquidity position is quite satisfactory. Despite the presence of current debt, Airtel should be able to pay off their debt should there be no capital expenditure in the near future. The fourth is capital structure analysis. Here we can see that Airtel does have satisfactory liquidity in terms of money and near liquid asset in almost an equal ratio. It is quite visible that despite deleveraging efforts, the non-current liabilities are very high, especially in comparison with the current liabilities. The company is highly levered and the majority of its shareholding is with Indian promoters, followed closely by foreign players. We are moving on to the debt analysis, which is with regards to the loan structure. A major portion of the debt is long term, which implies that Airtel will have to make periodic fixed payments. But 2 out of 3 of their bonds are maturing over the next couple of years, thus reducing the long term debt of the company in the near future. We are now moving on to cost of capital. In cost of capital, we can see that the cost of equity is rising due to an increase in dividends paid from 10.6% to 11.6%, and there has been an increase in long term borrowings in terms of cost of debt from 5.4% to 7.2%.
Rating history by Indian organizations. CRISIL and ICRA have both downgraded Airtel's rating from AA positive to AA, and the outlook has been changed from negative to now stable. Rating history by international organizations. Moody's has given a Ba1 positive rating with a review for downgrade. S&P Global, on the other hand, is given a rating of BBB negative with a significant financial risk. Coming to the key rating drivers, we have divided the key rating drivers into positive and negative points. The positive points are they have a very strong foothold in the Indian telephone segment, and along with that they are a very strong entity in the Africa because of their improving operating margins and efforts of deleveraging. The negative points are the major driver that they had a negative impact is the comparative pricing in India that has led to elevated capital spending because of stiff competition that Airtel has been facing, and it has led to a significant decline in the average revenue per users. So now we have rated the key rating drivers, the positive ones, into low, medium and we've given them the low, medium and high weightage. Starting with the high weightage, the strength in African operations is one of the major drivers for Airtel, and the market position in India is the strong market position in India is also given a very high weightage. The medium weightage is given to robust spectrum portfolio and healthy financial flexibility, and there has been a certain increase in the revenue market share, which is also given a medium weightage. Now, deleveraging has been given a low weightage because even though Airtel is trying to deleverage, its profits have been reducing because of stiff competition in the market. So, because of which efforts of deleveraging are a little doubtful at this point. Now, again, the negative ratings drivers have also been divided into high, medium and low weightage. The high weightage has been given to comparative pricing pressure because that has been one of the major drivers of the entire telecom sector in India and not just Airtel. That the comparative pricing pressure has led to the decline in the average revenue per users, and then there is Indian wireless operations revenue decline as well, which is contributing. The medium weightage has been given to moderate debt protection metrics since they already are putting efforts to deleverage their debts, and regulatory and technology changes which have happened in the past years, but they have not been very significant as compared to the market changes, and elevated capital spending, which is a result of the comparative prices that has been that Airtel has been facing, and the low risk has been given to foreign exchange and interest rate risk. Coming to rating peer comparison, we have compared Airtel with Idea, Vodafone and Jio. Coming to Idea Vodafone first, Idea Vodafone has a slightly lower rating than Airtel because of their higher exposure to technological changes, and the regulatory risk is affecting them more. CRISIL expects the net debt margin to remain ID. Jio has been given a higher rating than Airtel because Jio has had a sharp increase in the market share and it has a wider spectrum holding as compared to Airtel. Now coming to the risk analysis part. All the challenges that have been faced by Airtel has been divided into 5 broad categories of risks, which is strategic, regulatory, market, operational, financial and regulatory. We feel, as per our analysis, that the risk associated with adverse regulatory developments, downgrade in credit rating and highly competitive industry consolidations are affecting Airtel the most. Now coming to the probability of default. So according to our analysis, the Altman Z-score that we have calculated has been constantly decreasing in the last 4 years, and currently the score of Airtel is 1.58, which puts Airtel in the danger zone. Now these kind of companies which are in the danger zone have the probability of going bankrupt in the next 2 years. The probability is of 72%.
Coming to rating methodology, for analytical convenience, the key factors have been grouped under 4 broad heads. We are looking at from the financial, from the industry, from the business risk, and from the management quality and the corporate governance. So coming to the financial risk, so as you can see, we have given highest weightage to solvency and liquidity. Currently, Airtel is well poised to maintain its solvency. However, liquidity is an issue because of low levels of discretionary cash flow. Also, a fall in enterprise value can affect its valuation, even though valuation has a slightly lower weightage in our analysis. Coming to the industry risk analysis, the industry financials is where we have the highest weightage, and this is where Airtel is also scoring very less. That's because of continuously falling average revenues per user, and that has a major impact on their profit margins and earning stability. The stabilization will occur only when Jio decides to kind of increase their prices or maybe just bring it to a certain benchmark. Coming from a business risk analysis, we are facing issues when it comes to business growth, operating efficiency and the customer mix. From a business growth perspective, there's negative growth in revenue and EBITDA. Margins coupled with intense competition are actually stifling the business growth. From an operating efficiency point of view, Airtel has introduced a war on waste program. However, this needs to be sustained and continued to actually have some kind of meaningful results. In the customer mix, only hardly 10% of the users are postpaid and most of them are prepaid, and that is an issue from a business risk perspective. Coming to the management risk, the financial targets that have been set are actually on a very higher side, and also this also carries a very high weightage, and so the management has to really form a commitment to ensure that they are able to meet all these targets in the lieu of such a difficult business environment. So this is the rating that we have come up with, BBB plus, and at a score of 3.47. We have given a weightage of a third to the financial risks, and the other weightages have been given to industry, management and business equally. We have given a positive outlook, and rating upgrade might be possible if Airtel arrests a decline in its India mobile business. Improvement would be indicated by moderating competitive intensity, resulting in modest growth and capital spending, such that free flow of cash from operations to debt stays sustainably low, about 20%.